Welcome to TradeTheMBI.com. This is John's reports for the 16th. Well, no surprise. New highs pushing through. The ECB increasing its rates. Fed continuing to go back and forth, but again, uh, the economy is still plugging along, and as long as that's the case, where else are you going to put your money? And up to this point, though, without the rally, you could have made the argument that treasuries were a more interesting bet as rates were going up, but as I said way back here, the market wasn't going to let that suffice as a condition. And sure enough, we saw the move higher from that. Was not hard to see that that was coming. But for some, it was because they've all been projecting gloom and doom and that everything was about to collapse. You just look at that shakeout. We're continuing to rise with that Azure gold shakeout well above. Well, now we're getting close to the peak area that tends to be a little bit more difficult here when we get to that plus 25 range on the shakeout, which is that dark magenta or purple line, and it can't sustain that indefinitely. So there will be some fill back into that. But again, every time there's a little bit of short increase, and particularly we saw this on the NASDAQ, when you have this solid bull reading, it's an easy short cover force, and that's exactly what they want. And you may need a couple of more dips in between there just to encourage more who think that it's overbought, I got to get in, and they get scrambled, having to buy higher. And here you go from a TLT standpoint. There was the exit of cash from treasuries into the market because too many people now are going to get into this place of, well, now I might have missed the market with it continuing to rise, and then they run from there. And that's usually when we see that getting to an accelerated state, we'll know that things are probably about to flip the other direction, because at that point you have a significant number of people positioned all one direction, and then it's what the market does. You go against the horde. Oil still bound in that range. Nothing too fantastic. 70, it's okay. This is that it's just all right. And when it's just all right, the pain trade is always to the upside. It hurts because it's hard to justify the valuations, this, that, and the other. But again, we're not talking about now, we're talking about the future. And the ECB giving that boost for the rate cut, and this was that preamble. So the people that knew that that was coming started buying in there, and that's why we saw that rise, and then boom, the release. And still not significant enough to justify where we're at, but we knew that there had to be a counter trade into this because they weren't going to let it get below that 106 range. It gets too dangerous once they get below that area, and because they can't control it, you get liquidation, people wanting to find return elsewhere so as not to lose value. And so that's been the obvious play back and forth. And a little bit of spike back from gold. Captured a few short covers within that config. Delete my command line there. We'll let that pop forward. We didn't see the cryptos really respond all that positively to such a strong market move. And again, no surprise there because those readings not really conducive to that. We've made new lows, even though it's still stayed between this, not looking as though you're going to break the 23%, which is now starting to decline. And also then from a ETH standpoint, wasn't enough to do a whole lot of anything. And this is not too surprising. We've had the positive fill in that dip below the red line that we knew had to get filled. It was just a matter of waiting for it to take place. And again, it's going to take some kind of market situation or world economic situation to cause that to change. So keep an eye out. And there was that nice, beautiful run, and pretty straightforward. Did have a spike of the MBI white, but it was continuation within the MBI, so not until that broke down and you get the crossover that we're seeing a little bit of fill back, modest, but look at that, not a whole lot of positive extreme to have to fight through just at the end of the run here, and that's what's getting filled back right now. So fairly strong run. Not a whole lot to complain about from that standpoint. And we can see from the 5K standpoint, started out fairly flat, which was the pre-market, and things were even soft right at the beginning. And then it happened right about there. And all of a sudden, once everybody was on the same page with exactly where the Fed is, everyone could reach agreement. And it's just a nice little push all the way through without much disagreement whatsoever. We do have positive extremes beginning right about there. And it was interesting because remember in the video from yesterday, I talked about moving back down towards the 44. We did exactly that. And then they came and brought it right back up from there. So it fit beautifully within the construct. No complaint whatsoever. I thought it was pretty simple stuff. But as always, though, we'll continue to follow it and probably see a little bit more of that fill back come in just to smooth it out. If it does, I think that's more healthy. You got a better chance of things going up if it does that than if it just tries to maintain a parabolic move. So always keep out for that. Anyway, I'll post anything relevant on the Skype chat. Trade well. Have a good one.